Good morning, everybody. Today's Monday, March 2nd, and this is the pre-market analysis for today. A lot of activity over the weekend, of course. The bombing of Iran started. Here's my advice to everybody that's, panicking and not knowing what to do. I would say you have to be careful on your source of information. Um, I just I have faith in what's going on right now that they're just not wildly planning this and shooting bombs off without understanding what's going to happen. There's definitely a lot of information as far as twists that are being portrayed out there that this administration doesn't know what they're doing. I just, based on the history and what I've seen from the way this administration acts, I just don't think that they act without knowing what they're going to do 6 and 7 paces ahead. So, anyways, that's enough with that. I would just say that I don't think it's going to be a one-day bombing and it's going to be done. I think you're dealing with some people that really want to do harm to the world, and I think they're going to go down dying for it. So I think that's going to be the biggest snag. However, I think we definitely obliterated them over the weekend, and I don't think that they have that much to be able to fight back with. But anyways, there'll probably be some activity for the next several weeks, I would imagine. However, we do control how long we want to be there. So that's really the most important thing. Anyways, let's get into the economic data right now. I don't see anything other than ISM manufacturing is at 9 o'clock today. Tomorrow, I believe we have some Fed speaks going on this week. Tomorrow about 10:45. I don't see anything else from there. And then on Wednesday, we start to get some economic data coming through, non-farm unemployment change. Then we have ISM service PMI at 9 o'clock on Wednesday. And then we've got crude oil inventories. That'll probably be a big focus based on everything that's happening right now. I would say that's going to be probably a major number. The people are going to be watching oil, and defense stocks are obviously spiking up today. On Thursday, we have unemployment claims. Friday, you have a glut of information at 7:30 between hourly earnings month over month, core retail sales, non-farm unemployment change, retail sales, unemployment rate. So that'll be it on Friday as far as the economic data is concerned. Let's see if we can go and find. So we also have earnings this week, so we can go over after the close today. I don't see anything after the close today. Target before the open tomorrow. We have after the close tomorrow. CrowdStrike. I don't see much on Tuesday. Wednesday, you have Broadcom. That'll do a little something to the market. Rigetti has been, for all those penny stock traders. And then we have, I don't see anything before the market on Wednesday that's going to potentially impact things. Thursday before the market, I don't see anything. After the close, though, however, you're going to have Costco. That will definitely impact the Dow, that's for sure. And then Friday, we do not have anything else after that. So let's get into it right now. So the first thing I'm going to go over today is the VIX. It's the volatility index. And whenever there's some kind of GOP something happening within the world, you have a big spike in the VIX, and it measures the volatility. So basically, rule of thumb is if the VIX spikes, stocks typically do the opposite. So if the VIX is calm, and I'll show you a good picture of what it looks like here. Let's go 360. So you can see down here, the VIX is down, between 15 and, typically you want the VIX to be, in the single, below 20s. Ideally, if you're below and you're in the singles, it's ideal for stocks. This is typically calm weather for trading equities. So now here I marked a few of the spikes that you have in the VIX. So the VIX got up here to $60.13, and that was on Liberation Day. So whenever, just something to keep in mind, when you see a big spike like this, it's definitely rattling to the market, and everybody's looking at their portfolios and thinking the world is coming to the end. I had several close friends call me up and asking me what to do, and I said, "Don't you dare sell a thing on this spike like this, especially with the VIX elevated at $60." So good thing that they didn't, because the VIX actually came crashing down, and then their portfolio came back to normal, and then some, of course. So I've also outlined a few highs here. Here's a VIX spike back in November of last year, and that was due to the Bitcoin glitch in the crypto market, and that spiked up there. And then, of course, it came off of that. The crypto market is still in the penalty box from that, though, however. And now we have another spike up here today, which is Iran. And so that got up to $25.24. Now, one thing to mind you is there are some gaps. There is a gap up here between 35 and 36 that is open. So the gaps, I went over gap fills a little bit yesterday on the pre-market ahead review. So these gaps they act just like equities also. They'll fill as well. So you can see like there's a gap down here after that big spike, and that, we had a gap up on April Liberation Day, and then it came back and filled probably end of the month. It ended up filling. So that's a quick fill, right? Do they always happen that way? Not really, but here's another gap. It's gapped up, right here from January 14th, and then it came back down, and by the time it filled a week later. So here's a gap up that we have today. I'm not saying that this could fill today, but you have to keep this on your charts where it could potentially fill. So like here was a tiny gap, a gap up from August of, actually it was a gap down from August of last year. And then I'm not sure when it filled. However, it was a short little fill, but I'm just pointing out these gaps. So there's a gap up today, and it gapped up, right now, you measure it to where the last trade, came down to. So I would say typically 22 to, 22.62 is a gap up. So when it starts getting in this area and it pulls back down in here, then you could be, looking for it to potentially fill back down to that 20.99. That then it could potentially act as a support level as well. So, the one thing to keep in mind, we do have an open gap up here at 35.17 to 36.85. Big possibility we get there. When? It's always the $1 million question. So something to keep in mind when the VIX volatility index spikes, it typically has a negative impact on stocks. And usually when you have a war or a bombing like this that happens anywhere in the world, you're going to find that, especially on a Monday. And I think that most of the time these strategic strikes are planned on purpose to happen over the weekend versus during the week. So it happened on Saturday, had about 48 hours for things to digest a little bit, so it doesn't really, throw the markets off. So, I mean, you have to understand that when they're planning a bombing, they are definitely taking into consideration the impact on that it's going to have on the stock market. There is no way that they don't. So anyways, let's get to the broader markets. If you're new to the channel, subscribe to the channel. Hit that bell over there so you can get future notifications on the video. Hit that thumbs up button and like this video, and then go down in the description and click on the link to join our Discord community for live trading, other informational products that we offer in the community as we try to build that community as well. So the same thing on the ES, we have a gap down. So, when you get up into that level, if you can get above that, I would say this 68.57.39 level, you could look to close that gap there. That will probably then become resistance, so you have to watch that on the downside there. Considering what happened over the weekend, I don't think the markets are really down that horribly. You could see right now in pre-market, it came down to the 67.71.5 level like a champ, and that was December's monthly low. So it's important to hold that level. You're also right now respecting September's of 2025's high at 68.14.5. If you lose that, I think you're going to come back down here and test that low again. If you lose that 67.71.5 number, you're going to come down and you're going to test the monthly low from February at 67.51.50. So if you lose that level, then you have 68.84.5, which is a weekly low from November 24th. On the upside, like I said, if you push up in here to fill this gap and you come into the close from Friday, you may get some resistance in there. There's all kinds of levels up top here that you have to worry about. You have the 100-day SMA sitting at 68.90.92, and above that, you have this lower end regressional trend line that I have here sitting at 68.96.95. And then above that, you have the 20-day SMA, which will probably open up today at 69.05.21. So I would definitely watch yourself on the short side, though. You know, we're definitely coming into some levels. If we do lose this, if we do get some more downside, which I'm not going to be surprised if we do get some downside. I would like to see some downside for probably the most part of this week and get everybody kind of concerned about the downside and then just rip higher back into the new highs. That would be ideal. There's a good long, ideally, if the market pulled back to the 66.39.25, it's August of 2025 monthly high. So if we do lose these a couple levels up here, I like that level for a long as well. So let's take a look at the SPY. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video, go down to the description below and join our Discord community for live trading and other videos that I post and put in there as we try to build the community. So the same thing on the SPY. We're going to have a gap down when the market opens. Let's just clean this up a little bit here. So, you know, the SPY right now, in order for us to push higher, you're going to need to get above this regressional trend line sitting at 682.06. And we did lose a couple levels over the overnight trading, so that makes me a little weary. I would say it may come back down. If we lose this 675.79 level, I think we're going to come down to this 671.20, which is December's monthly low. And below that, I like the support level at 667.34, which is September's monthly high of last year. That's pretty much it on the SPY. On the upside, though, I will tell you on the upside what happens on the upside. You need to regain the 686.37, which is February 13th's high, in order to push into that 689.70, and then above that 691.66 level, which would be a good level as well. You can see this like little gap that's forming right in here. So the market likes to close up and do a little house cleaning to close up those gaps. So let's get over the NASDAQ again. Help me out, people. If you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video. NASDAQ, same thing. Here's our gap down, starting at 24,901.76 up to, I would say, you could say that 24,960.75, which is February 5th's high. We want to, and when the market opens, you want to regain this low from September 22nd of last year, 24,680. If you reject this, this will be a good level for a pop and fade. And you can see we did hold this August 2025's high at 24,495. If we lose that, I think we come down and test this July's high at 24,300. Let's take a look at and see where we're at in correlation with the moving averages. We're well below the 50, of course. It's 25,435. The 20-day SMA is going to be opening up at 25,048. Call it 25,050 this morning. You have Friday's close sitting up here at 24,958.61. And again, like I said, you're going to need to hold these levels. This July high of 24,300, I think is your last line of defense before you come down to November 2025's low, at 24,153.5. And if you lose that, I think there's not a lot of support down here until you get down to this 23,544.25. Let's hope that doesn't happen, though. Anyways, let's get over, let's take a look at the Qs for the final piece here. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video, go down to the description and join our Discord community when you hit that link down below. And then let's see here on the, let's clean this up, Qs, going to do the same thing. Going to have a little gap up on top here, from where we closed. I would say Market opens right now. If you continue to fail this 628 level, that's going to be a good level that you could possibly short here if we're below that. If you regain this 628, which is December's monthly low, I think you could push back into the February 17th high at 603.95, and then if you get above that, I think another pop and fade short could be up at that 606.48, 607.05 level, which is January monthly low. That's a pretty good level. You can see how that responded on Friday. Tried to push through there, all these wicks, big sellers that came through there. So that's going to be an important level to get through in order to push higher and get up into that 610.12 level, and then come into where this regressional trend line meets up here at 613.69. And just so you know, this regressional trend line was from June of 2025. On the downside, if we lose this February monthly low, 594.76, you can see we held it pretty well in the pre-market here. You come down to 590.36, which is October of 2025's monthly low. And if you lose that, I think a good long entry would be this 583.32, which is August of 2025's high. So that'd be a good break and retest and support that level as well. So that's it for the futures and broader markets here. So let's get over to Tesla. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video, hit that bell so you can get future notification on videos that I make. So let's take a look at Tesla. Let's see, Tesla, what did you do for me? So Tesla, we filled this, let's see, maybe we can clean up a better drawing here for us here. Let's stay on this. Okay, so we'll get to the 15-minute. So we filled this point of control. We spoke about this point of control last week. I thought it was going to fill at 395.28. It was from February 23rd. So you could see how I talk about my point of control levels. I leave them open after the market closes. If it doesn't come back and touch it, I leave it open until it fills. So this point of control was open February 23rd, and it finally filled on March 1st. So this is the strength of this trade strategy of the point of controls, knowing that you leave them up there and they will get filled eventually. So the positive thing about that to note, well, actually, let's look at the negative first. The negative is we have an open point of control down here at 365.90, and that was from September of 2025, September 11th. And then unfortunately below that, we have one more open point of control from September 4th down here at 333.78. So there's a likelihood that those could get filled within the next month or two. However, on the upside and the positive side, we do have some open point of controls up here. Actually, that one was filled, but I like that level, so I marked filled up there. But we do have some open point of control levels. The first level from January 5th of this year at 455.07. And then above that, we have one where it's going to get a little noisy for you, but I know exactly where it is. It's around 478.79. So that is a positive too, something to keep in mind. So if you have some, long-term strategies for certain stocks, sometimes, maybe develop your own strategy with your point of controls and see, how they come into play. So the one thing though to keep in mind here with Tesla and just like all the rest of the stocks, I said yesterday, there's going to be a lot of gaps, gap downs. So we could probably put yourself a gap down here at this level here. I would say give yourself maybe a little more there. Remove that. Let's say you're going to have a gap down. And you could go right there. So there's going to be a gap that will get filled. $1 million question is when. And so I'm going to leave that up here on my chart so I'll know that if I'm trading during the day, that this could be a level of resistance, because what happens with the gap fill, if it's below the market, it comes up there and then it potentially could act as a level of resistance. So I'm going to leave that up there right now. Let me just change some parameters here. Actually, that was pretty good. Okay, so we have for today, levels that are of importance. We have this 387.53, a must hold for Tesla, and this is February's monthly low. So I think there's a good chance we probably could test that today. Today, I like a possible, if we pop back into, like right now, we're at 393.07. I do like if the market opens up, we use this level here, this 395.28, could use that first level as a point of resistance. If we do pop above that, there's some other levels of resistance that are probably going to come into play also. This regressional trend line, midline that I have from January 5th, 2023, sitting at 397.17. Actually, just above that, we have the midline regressional trend line that comes right into 398.08, and that is from the high of this year. And then, of course, you're going to potentially have this gap fill, and that coincides with this weekly low of 400 and change set on February 17th. So lots of different plays that can happen there. If you take a look at the moving averages here, let's go to the 15. 15 will give us a little better view. So well below the 20s. However, we are right here at this 200-day moving average. So you have to respect that. So this is sitting at right at 390.71. You can see we dip below it, and now in pre-market we're just above it. So if we sell off into this level, I would watch and see how the market responds here. There's a good chance you hold that 200-day moving average, right? So watch that level. And then on that side, on the other side, though, if you do lose that level, and then you come down here and you lose this 387.53 level, which is the monthly low from February, there's a good chance we come down here and test that anyways. Then I think you come down here to this 382.78, which is a monthly low, or not it's a weekly low from November 10th of last year. And then below that, we have a lower end regressional trend line that I have from the high of from the all-time high set back in December of 2025, sitting at 380.25. This is a lower end regressional trend line that started from the high. And then if you lose that, then you're going to come down and you're going to go after these open point of controls that I have. 365.90, below that, 355.67. It's a weekly high from September of 2025. And then below that, that's that last point of control that's open at 333.78. Unfortunately, it's quite a bit down there. So, however, it's 60 points down there. And, we all know Tesla can trade 20 points in a day. So there's a good chance over the next month or so that these point of controls could get filled. On the upside, if you do get that push, I would say that levels of resistance would be this. I would say you could possibly play this first point of control that we had open from February 23rd, sitting at 395.23. The next one, I would say you could come into, which would be another decent fade, would be the low from Friday, which is sitting at 398.11. I think that would actually be an ideal one. So I think the key today is to be patient. There's no point in clicking the mouse button right away. Just let the market, settle out and see what kind of direction it's going to go. What I'm going to start with today, I am going to have today's expiration dates up just for the start of the morning and see how these premiums move. If they start to get too wild, I'm just gonna put myself on Wednesday's expiration date, so basically it'll calm down the premiums from fluctuating so much on a big spike in the market. However, so I'm going to start with 405 calls, which expire today. You can see that the premium closed at 298, but due to the fact that we are $4 lower, these could very well open up in the high dollar range, and if they do, I'd probably switch this to maybe the 400 calls. On the put side, I've got the 390 puts, and you can see they close at 91 cents, but we are down $4, so I anticipate these are going to be higher. I would say that there's a good chance these could open up close to $2, right? So we'll see where they're going to open up. If we go over and we take a look at our 5-minute opening range trade, I went over this last night, but I said that when we were trading on Friday, and with the way the market was responding, I said there's a good chance you can get your money, make your break on the upside, and then it could give you the break on the downside as well. And it did, but it wasn't as significant as I thought it was going to be. I thought we were going to fill that point of control that we filled over the night on Friday, this 395.28. I thought that was going to get filled on Friday after we lost this 5-minute opening range trade. So we're going to be watching. We'll watch these levels. We'll see where the market opens up. Again, we have the 200-day moving average sitting at 390.69. So if you are short or thinking short, I would be careful. Watch these levels and make sure that if you lose those levels, you lose them with significance and you have a good steam behind you. But I would just my advice today is I would just let the market play out. You have all day to make a trade. You have all week to make a trade. There's no point in ruining your whole entire week. And especially it's the beginning of the month. So let's not do that. So anyways, again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video, and then go down in the description so you can join our Discord community. I do live trading from 9:30 a.m. to 11 a.m. Eastern time. Anyways, that's about it. If I don't see you in the trade room, I'll see everybody tomorrow morning for the pre-market analysis. Have a great trading day. It's safe. Don't do anything stupid. Talk to everybody later. Bye.